What is going on, ladies and gentlemen? Today we are going to be talking about the Iron Condor. The Iron Condor is an options trading strategy that allows you to pick a certain range of where you think the stock is going to move if you think it's not going to go up or down. But I think it's a lot easier to show what it is than explain it. But essentially all it really is two credit spreads. So if you haven't seen the credit spread video before, I would recommend you subscribing to the channel, leaving a like on the video, and then going and checking out the credit spread video, and then coming back to this video so you can understand Iron Condors fully. But let's get back into the Iron Condor. Let's check out Walmart. Walmart has some alright Iron Condors, but they aren't the best. But Walmart usually moves within a certain range. Lately it's been dropping, but for a while there it was really just staying in the 120, 116 range. So it would have been Iron Condor heaven for anyone playing Walmart. I mean, you wouldn't get great credit, but you would still be making plays and winning. So one thing I need to point out, if you do Iron Condors or credit spreads at all on Robinhood, if you get assigned, you're going to get margin called on your account, and you're essentially going to owe Robinhood whatever the amount of the assignment is, but that should clear up in a day or two, so don't really worry about that. You don't owe them $44,000. It'll get cleared up. Just don't worry about it. I went more in depth on that in the credit spread video as well, so be sure to go check that one out. But essentially all the Iron Condor is saying that a stock is going to move within a certain range. So if I thought Walmart by January 24th wasn't going to go any higher than $16 or any lower than, say, like $13, you would be able to sell a credit spread on the call and the put side. So we could sell this credit spread right here, this 116.17 credit spread, or you could even do it wider, but just like normal credit spreads, the wider you go, the more risk you have. Just be sure to go watch the credit spread video. So you would sell a call credit spread, and then you would also do the put credit spread. Would make this $32 in credit if Walmart stayed in this $115 range. But if it went higher to 18 past the credit spread or lower to 111, you would lose your collateral, which on this contract would be 68, I believe. Yeah, your collateral would be $100, but you're collecting 32 in credit, so 68. That's really not the best Iron Condor right there, but if you see that a stock really isn't moving that much and you don't think it's going to break out of a certain range, maybe playing this high risk, low reward play will benefit you because you can do it more consistently. But you just got to be really careful, and you can get assigned, and then you'll get margin called on your Robinhood account. I don't think any other brokers margin call accounts on credit spreads or Iron Condors, so I don't think you have to worry about it on other accounts. But let's go to a different stock so I can give you one more example of an Iron Condor, because I feel like the visuals is the most helpful way to see it. Let's go to McDonald's. McDonald's is another good one to sell Iron Condors on. As you can see, McDonald's didn't move like at all for most of the year, so this would have been a really good Iron Condor selling stock. You just got to be really careful with the high risk, low reward plays. I don't really like playing those that much. You can get a lot better credit on these, but there's a lot more risk because the options contracts are more spread out. They're spread out by $2.50 increments rather than a dollar increment like Walmart. So it's the same thing on this stock as well. If we thought McDonald's was going to stay in a certain range, we could say it's going to stay in this 212, 210 range. We sell this 215 contract, buy the 217.5, we get $21 in credit. Go to the put side, sell the 207.5, buy the 205. Oh, and it's the same credit as the Walmart, so this isn't a good play. We're risking way more on this play than the Walmart play. But if I was to do an Iron Condor, I would kind of think of a range that it could kind of go up a little bit or down so you could get a better credit. So you could sell like this 212, 210 credit spread on the put side, get $1 in credit, and then go on the call side, or maybe wait for the stock to go up and then sell and buy one at a later date. There's a lot of strategies you can do with Iron Condors, but you just got to be careful because there is assignment risk if the contract you sold goes in the money, so you got to be careful of that. And yeah, you just got to remember that you're picking a certain range that the stock goes if it goes any higher or any lower than the range you selected on the two credit spreads you sold, the call and put credit spread, then you're going to lose your collateral. One thing I want to make clear is that if the stock goes up or down, you're not going to lose $500 on the credit spread. You're going to notice that when you buy two credit spreads, there's going to be two contracts that have a $250 collateral. So if the stock goes up, you're not going to lose on your put credit spread because that's out of the money. That one's going to expire worthless, and you're going to get the $250 collateral from that back to you, or whatever minus your credit you got, and then you're going to get assigned on the call credit spread. And then the opposite, if the stock goes down, the call credit spread is going to expire, and then you're going to have to get assigned by the put credit spread. So just go be sure to watch the credit spread video so you understand credit spreads, and then just remember you're selling two credit spreads, one on the call side, one on the put side. That's saying that the stock's going to stay in a neutral range and end in that range by expiration. So the Iron Condor has a lot of uses. You can get really creative with it. So be sure to watch this video again or watch some other Iron Condor videos and get really familiar with it, because the more tools you have in your tool belt, the more money you can make options trading. So I hope you guys enjoyed this video. Be sure to subscribe to the channel. Be sure to leave a like on the video and check out all our past videos. We upload daily. We're live Monday through Friday, market open to market close, so be sure to check us out live. Again, I hope you guys enjoyed this video, and I'll see you in the next one.